Well, g'day there everybody. Thanks for joining me on this Wednesday afternoon market recap. I hope you did enjoy, of course, the long weekend for those of my American friends and students around the world. It has been a relatively slow-paced beginning to this abbreviated week's worth of trade. You can see on my screen right here, the Dow Jones Industrial Average is really just treading water. It has been moving sideways. However, the Nasdaq did pull back. It is looking as though we are setting up that of a bull flag continuation. If you pay attention to what I've just drawn on the screen, as long as really we remain in this type of pattern and also hold above, I'm talking about a close above this particular level, being the gap that we closed as at Tuesday, you should expect the exponential moving averages to support price on the Dow Jones Industrial Average. And this right now, what we are currently sitting through is again, sort of a secondary retracement since this past bull flag back into these rising exponential moving averages. A lot of people begin to worry just as they are shaking out a lot of those weak longs. And for those who hold, or at least hold with applicable stops on those open diamond positions, you should see over the coming days, if not by very early next week, a very sudden pop to the upside that we're looking to take us on up to about 26,435. If I show you the same chart on the S&P 500 just here, you can see really since we broke out, and this is going out really 1.5 weeks ago, above 2,884, it was really good that we did so. But at the same time, we recognized that we did have this open window. And again, it made a lot of sense for the S&P 500 to come on back down and to retest its all-time high. You can see on my screen right now, I mean, we have to go back and at least factor in so much data now to at least pay attention to this 2,870 figure. Most importantly, it has been what has happened around this orange rectangular box. We have definitively now broken above it. And this is looking like a textbook retest of the breakout pivot, again coming in at about 2,870. You can see that it is relatively similar to the type of pattern that has set up on the Dow Jones Industrial Average. And what we've really done over really yesterday's session of trade and today's session is begin to almost close this open window. Yes, we can continue to pull on back down a little bit further, but really as long as we hold above this general vicinity, and I am expecting the S&P 500 to ultimately break out above this level, okay, then we should expect that of a bull flag continuation to set up. And it makes a lot of sense given, of course, the breakout, or what has been the recent breakout of the all-time high on the S&P 500. It will become concerning, so to speak, if we do definitively close below the rising 20-day exponential moving average. And yes, these markets are stretched to the upside, and we are paying very close attention to what happens to the Dow Jones Industrial Average when it gets on up and closes its open window. This is the final market to do so, again at 26,435. So there might be a little bit of short-term opportunity, so to speak, if you're not in those diamond positions, to actually set up a contingent order to jump into a bunch of SPY positions, but it may turn out to be a very short-term rally, and that is all dependent on, again, what happens on the industrial average. If I bring up the Nasdaq, this is the weakest market of the three, but if you pay close attention to, again, the gap back here, this is Friday the 24th of August, and this here is the Monday the 27th. You can see, I'm trying to bring this into perspective for everyone, just so you can really establish, or at least see for yourself, this open window, very similar to the S&P 500. We are in the process of actually closing this window. And again, what I haven't touched on today is that we are still simply, very easily, still holding above the intermediate trend line, as you can see on my screen. So if you go back to the late stage of March, early April, we have been in this definitive uptrend of higher highs and also higher lows. Well, nothing has really changed, even though these markets, if you pay attention to the oscillators and some of the divergences that are setting up outside of that, as long as we do remain above these intermediate trend lines, back down at 7,900 on the Nasdaq, you can expect this market to continue in its bullish trend. So as I bring up the exponential moving averages, you can see that we do have that of at least the beginning of a long lower wick. This doesn't necessarily mean it is the bottom, but if I was to draw that of a support area as well, it makes a lot of sense that the Nasdaq may come on all the way back down to about 7,009, say 20, may even overshoot that a little bit. But with all things considered, these markets are still relatively healthy, even though we are a little bit concerned about just how overbought they are. If I bring up the Russell as well, you can see that we are starting to see a number of hangman candlesticks very close to our sort of target area on the Russell 2000. 1,756 is the target. You can see on Tuesday we have that of a hanging man again. Today on Wednesday we have another similar candlestick, a shooting star a couple of weeks ago, a couple of dojis, high wave spinning tops, and we've got a couple of failed moves as well, which is telling me that we're towards the end of this current move to take us on up to 1,756. Personally, I think we are going to hit this level, and I think it's going to coincide with the Dow Jones Industrial Average closing its open window, and where the S&P and the Nasdaq will be, well, again, that's a little bit up in the air at this particular point. But again, just come back to the very simple understanding that as long as the markets hold above their respective intermediate trend lines, you can see all of these sort of red bullish trend lines below, again with a very nice angle to them. As long as we remain above these areas, everything is a-okay. Now, Apple, let's recap a couple of these stocks. Apple, again, we were very hesitant to actually jump into this above 229. We were talking about this over the weekend, the slope, or at least the velocity of this move being largely unsustainable. In fact, we had a target at $225 a share it was also over here as well, but this became a stop after the 219.61 entry, and the dashed line means that we weren't interested in any bullish continuations, largely because of where the Dow Jones Industrial Average is. Well, today you can see that reversal candlestick on Apple. It's not going to happen overnight. This is going to be a process, but this is the first candlestick really after what has been that of the shooting stop and doji candlestick to indicate that this move that has been very aggressive to the upside is pretty much running its course right now. You can see that we are once again extremely overbought. I didn't show you this on the actual markets themselves. However, you can see, or at least you can expect, very similar types of settings on the Nasdaq when you're looking at these signals on that of Apple as well. So major warning signal there on Apple. It does look as though this move is exhausted. And again, it's largely true for a lot of tech companies. Obviously today, Netflix was down quite considerably. It's good if you had your stop on that trade, you would have locked in that profit. But one of those stocks that got hammered today, so to speak, on the Nasdaq, or at least contributed to its relatively bearish session, was that of Netflix. Another one was that of Amazon and also Google. You can see that I've been gravitating around that psychological round number of $2,000 per share. You can see that we're back down below that. We're down at $1,994. This is getting pretty much up at $2,050 per share. So you can see again, we've got that of a sort of a one black crow candlestick. You can call it that of an engulfing as well. But when you take into consideration just how stretched Amazon is to the upside, when you're looking at these oscillators too, it makes a lot of sense that this move is in the beginning of what may become that of a sideways consolidation. If not, we may set up a series, or at least a larger or deeper retracement, which also does make a lot of sense. You should not be gravitating around Apple, Amazon, or even Google for that matter, or even Netflix, pardon me, at the moment long. All right, that's really the name of the game at the moment. You can see we were down $22 on Netflix, again coinciding with sell signals across the board. I was expecting this to come all the way back up to about $3.90 per share. We obviously didn't get there. We saw a little bit of weakness yesterday. Today was the major sort of day for Netflix to pull on back down. But the good news for this stock is that, look, the markets are still bullish. We're still above support. And what has been a relatively profitable move above 328, depending on where you place your stop, potentially you may be out of this at the moment. But although the signals are sort of short-term bearish at the moment, we are still doing a lot of very positive things on this stock, and as really on tech for a whole as well. Let me rotate back up. You can see Tesla. Tesla's falling like a rock. I assume we are going to sort of hold support, probably down at this area at 280. We've been really largely expecting this type of move down to this support area, and we're just simply going through the motions. I do believe we are going to price in lower lows for Tesla moving forward, but simply not just yet. IBM held up pretty well today, up 98 cents. We still have a couple of minutes left in today's session. Still looking at this ultimately breaking above a lot of these past sort of short-term swing high resistance points. Looking at this galloping really up to 155, but this is largely dependent, again, unfortunately, on what the Nasdaq and also but what the Dow does as well. So you can see it's just largely moving sideways at the moment, but we do have a relatively healthy print. And the markets are setting up collectively for a lot of bull flags, so to speak. So it does look as though we might get another little secondary pop. I'm not all that convinced on that pop if you are privy to that analysis class, which I do over the weekend, but time will tell what is going to happen. What has definitively happened on Google is that we are pricing potentially a major sort of reversal pattern at the moment. This is sort of taking the formation of a double top. We have been looking at this aggressively off from this support area, trading it up to 1,285. You can see today, extreme weakness. We're pretty much back down in this green rectangular box. We were looking quite good towards the end of last week. But we didn't get all the way up to 1,285, similar to Netflix. So if you think about the weakness that we are seeing in Netflix, Google, Amazon, and Apple, these are generally the leaders of the NASDAQ, or what have been the leaders for a number of years on the NASDAQ. And they're starting to show, again, probably more so intermediate weakness. So we'll keep an eye on Google moving forward. I wouldn't be looking to short this at the moment. Nor would I be looking to aggressively trade this long. We need some more information around this roughly 1,200 area. And essentially what's happened is that we're coming back down, or at least we've overshot the 50. But what happens is generally when you do overshoot the 50 and that of what appears to be sort of a bull trend, that is where, again, the trend just simply continues, even though we have technically closed below it as at the close on Wednesday. So think about that on Google. Really, I'd be sitting on my hands with that particular stock. Again, a lot of these other stocks are still moving sideways. No major technical detail to go through. We saw a little bit of a pop today on Caterpillar, so to speak. It is holding up above, again, its long-term sort of trend on this to the upside, which is good, but at the same time, it's largely been stuck moving sideways. We've got Baidu, which is starting to once again pull on back down to support at 216. Just pay attention to these stocks really at the moment. It is going through, again, a little bit of market volatility. We'll see what happens on the NASDAQ tomorrow. And again, Boeing Airlines simply moving sideways. There's not a whole lot that has technically changed other than a couple of reversal signals on some of these major stocks that we follow. But at the same time, sort of conflicting and mixed signals across the board on all three of the widely followed US market indices. I'll be back with you tomorrow as at the close on Thursday. Hopefully we do see a shakeout move to the upside. That would be ideal. But again, monitor those support areas, monitor those rising exponential moving averages, and think about the markets really at the moment in terms of holding above the intermediate trend lines, and anything that does happen within this area being that of a very short-term minor level correction. All right, if we do see one. Otherwise, the print itself and the candlesticks, the chart patterns are suggesting, at least on the Dow and the S&P, potentially a pop to the upside, which is exciting as well. All right, so that's going to do us as at this Wednesday afternoon market recap. If you have any questions, shoot them off to me. success@pivotpoint-trading.com. Enjoy your evening, everybody. I'll be back with you tomorrow for another market recap. Goodbye.